FET is not just suffering from the general crypto market going down, it is getting manipulated. Because clearly there's a lot of attention on the asset. The last video published on this channel got 47% more views compared to the average video. Yet the price keeps declining despite all of that attention. And there's a reason for that. Nazoku on X, formerly known as Twitter, has found that Revolut has dumped a total of 8.5 million FET on Coinbase. So is this potentially an opportunity? Because historically, FET is trading in a range and the average price is 62 cents. So is there the potential to just get back to that equilibrium and appreciate by more than 260%? Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and I did this mainly through active trading of altcoins. My track record is on the website down below. I started to publish my trades in real time 2 years ago. We are currently with the open positions at a new all-time high. We achieved 47% per annum over those last 2 years. And that's while everybody else lost their money. Now, every single trade here is posted in real time. Those are all the trades that have already been closed, but there's also the premium membership of this channel where I share the trades in real time. Now, the FET token is the result of a merger. That merger is called the Artificial Superintelligence Alliance, but the ticker symbol stayed FET, coming from Fetch.ai. So we've got Fetch.ai, SingularityNet, and Ocean. And the founder of SingularityNet still regularly posts on Twitter. And the question is, will FET potentially benefit from a completely agentic AI future, so where AI agents trade against each other? Now, I publish my views on crypto regularly on X as well. Feel free to check out the account. Make sure that you follow the right account though. So that's @BitcoinStrat. Make sure that you don't follow the wrong account. There are many scam accounts. @BitcoinStrat is the correct one. Now, FET has been pumping and dumping a lot. But relative to the rest of the altcoin market, so that's what we see over here, the FET price divided by others. Others is the altcoin market. It's everything except the top 10. FET relative to the alts tends to at least form higher lows over time. If it's also going to form higher highs in the future, that's to be seen. Relative to Bitcoin though, it still tends to underperform. And where does the long-term underperformance come from? As so often with many altcoins, it's token inflation. Now, token inflation used to be a big problem for Fetch.ai and also for the other related tokens, like in the early days, AGIX. Just have a look at how quickly the supply grew. But going forward, supply growth isn't necessarily that much more of a problem. 1 year from now, we will have 2.4% more supply circulating. And in general, the token inflation is rather modest. 83% of the entire supply is already circulating. So there are many stories how this merged project is going to make money. Of course, everybody talks about AI agents and then a potential connection with a marketplace, the agentverse. But we've also got a very conventional blockchain, which interacts with the FET token. In the past, the supply growth was an issue, but going forward, it won't. So it's all about adoption now. And short term, it's all about attention. In the last 24 hours, we saw roughly 8 million worth of trading volume on the spot market. On the perpetual futures market, we saw 40 million. So short term, it's the leverage on the price that dictates where things are going. And so this here is probably the most sensitive of the indicators. How much trading volume do we currently see on the levered bets on the derivatives market for Fetch.ai? Or FET. Or should I rather say the Artificial Superintelligence Alliance? I'm still used to the old name, but have a look at how much the price and the trading volume correlates. When many people trade, the price goes up. When less people trade and the leverage moves to another asset, the price tends to go down. Now, since recently, FET tended to trend rather downwards most of the time, most of the liquidations happen on the long side. So the people that are betting on rising prices. That being said, the current leverage that's on the asset is not particularly high. With roughly 66 million worth of bets on Fetch.ai. If this was to go up again to more than 200 million, then the price would definitely appreciate as well. Again, there's a correlation with how many bets are currently made on the asset versus where the price is going. The open interest is a measure of how much short-term leverage there currently is. And fundamentally, that's because everybody that buys FET via the perpetual futures tends to have a shorter time horizon. Because perpetual futures are great for short-term trading, the transaction fees are very low, but they are bad for long-term holding because there are financing costs. So using the perpetual futures really only makes sense if you want to get in and out of the asset quickly. And that's why the leverage shoots up in February and then crashes down back in June again. So those are short-term moves. This is not multi-year holding behavior. But given that the leverage currently is not necessarily that high, that's not a risk for potential deleveraging. Now, instead of just following the news and trying to trade an asset that way, I think it's better to just quantifiably figure out what kind of trading rules historically worked well for a particular asset. And over the years, I found out that golden and death crosses work extremely well for altcoins. The only question is, what moving average combination should we take? What's the longer term versus shorter term moving average that historically gave the best golden and death crosses? Now, to get that answer, we need some number crunching. So this comes now from Bitcoin Strategy Analytics, the backtesting platform of this channel. We are backtesting the artificial super alliance token. We are going both long and short, so we bet on both directions, and we don't employ any leverage. And we're just looking at what is the best combination in terms of the slow moving average versus the fast moving average. So this is a combination of 40,000 simulations of buying and selling. And the best combination is over here. It is the 17 plus 38 day simple moving average. That would have generated more than 140% per annum, while buying and holding FET rather gave us negative return long term. The maximum drawdown is also much lower. In other words, the risk is lower compared to just buying and not doing anything. Timing the market is worth it for FET. And so here's then that performance of that trading strategy over time. We've got the FET price at the top. We've got the strategy equity at the bottom. Pretty much every single year, that strategy made money. And what does it tell us today? It tells us to be rather cautious. The 17-day simple moving average is below the 38-day simple moving average. We got our death cross on the 16th of June. Now, of course, not every single trade here works. There are bad signals. But in general, if you're considering to get into the asset, it probably makes sense to at least short-term time the entry and then afterwards the exit, based on those two moving averages, simply because they tended to work the best. The win rate of that strategy is actually not that high, only 43%. The reason why it works is because the average winning trade is much, much larger than the average losing trade. This is typical for trend following strategies. We tend to outperform because we catch the trends, but if we have bad signals, then we cut our losses frequently, but at very low magnitudes. So that's in general how I set up my trading. That's why the track record looks the way it does. And again, every single trade is announced in real time, and we follow exactly that strategy. Let's have a look at this Luna Classic short over here. So that's in Telegram. All the signals are both in Telegram, but also sent via email. And we did the exact same thing here, right? We got a death cross after a massive rally in the token, and then we bet on a falling price and subsequently closed that position once we got the golden cross. So those kind of backtests, I think they're extremely useful. They work really, really well. Otherwise, it's pretty much impossible to generate that kind of consistent return, also with that magnitude. Now, I've got something new to announce here, because in the past, I always just ask, hey, just sign up for this membership and try it out yourself. There is actually a money back guarantee, a 7-day money back guarantee, but I can see how just trusting another YouTuber and losing money again is a problem. And so I just want to give as much proof as possible. And that's why I currently give one live position, one premium position that's currently opened by the premium members for free. You just put in your email. The link to that page is down below. You will get that trade. You can enter that trade. And that way you can finance your first membership fee yourself without actually paying anything. You're just making some money off the very start. There's also going to be a tutorial video on how to open that position and how to manage the risk. So again, the link is down below in the pinned comment. There's no payment, there's no credit card, just put in your email. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.